Hello everyone, welcome back to the video analysis series. Today we are going to discuss about Mrs. Bector Food Specialities Limited. This is a very interesting small cap company. Here the market cap is less than 1800 crore while the company has multiple sector where we have a very bullish view. It is primarily can be called as a packaged food company in India. They provide biscuits, bakery products. Then they are also into exports. They also supply raw material to different QSR restaurant, and they also do contract manufacturing for some of the premium brands of India. So, since we have the bullish view on all these sectors, we felt that Mrs. Bector can be an interesting company to look at. The packaged food market in India would be about 1700 billion as of 2021 types, and it is expected to grow to 2700 billion by 2025-26. So we are expecting somewhere around 10 to 11% growth in the next few years for the entire packaged food sector. How this growth is coming? So 5% would be something kind of volume growth. 2-3% would be somewhere around, we will say, the increase in value of the product, where you migrate from a low value product to a high value product. And there would be 3%, 4% kind of mere inflation. Right now the inflation might be very high, but if you look at the long term prospect, the inflation should be around 3 to 4% for a packaged food items. Let's look at some of the factor which is resulting into increase in demand for packaged food products. Few of the socio-economic factors which we have looked upon is contributing to this growth are increase of youth in workforce. Then there is general trend of urbanization in India, rise of middle class population with higher disposable income. Then there are some other trends, something like we have seen now nuclear families, increasing women participation in workforce, shrinking family structure, support structure. So these are reducing the time which anyone devote to household cooking, and that's why we are migrating towards packaged food products. So we see the continuous trend of rising consumption of packaged food products in India. India traditionally has been we cook fresh food, and we rely less in terms of packaged foods compared to our Western counterparts. So if you ever compare what is per capita consumption of packaged food in India versus Western countries, our number per kg would be very low because we still rely largely towards fresh cooking. But the change is very much visible in urban pockets. There are other reasons to be optimistic about packaged food consumption growth. Something like emergence of modern trade and large retail outlet, something like D-Mart from Avenue Supermart. These are leading to the consumption of packaged food item in the urban pockets. Apart from that, there is one interesting reason which I found can be a reason for future growth is emergence of hyper local delivery, where food and grocery item will be delivered to you in a span of 10 minutes. So earlier what might have happened is some kind of food consumption which you wanted to do, but because it would take an effort to get down and bring the food, you forego that consumption. And now since this service is available in urban pocket, that food will be delivered to you in 10-15 minutes. So those consumption will increase. On simultaneously on the other side, there is lots of wastage on packaged foods which used to happen in a household because generally you buy in bulk. Now because of 10-minute delivery, you might not be interested in buying in bulk for a month and then holding it as an inventory in your household. Since service is available and you can order anytime, might be your quantity size will decrease and your frequency of ordering will increase. Let's look at bread and biscuit market of India. Earlier, what we have seen is 1700 billion market in India was the packaged food sector. The bread and biscuits would be something around 50,000 crore. Of that, 90% would be biscuit market. Bread would be very small. Here, one thing interesting is biscuit market is about 90-95% is organized, And even within organized, the large players are Britannia, Parle, and Sunfeast from ITC. In a bread market, it is still very much unorganized. So 50-60% of the market is unorganized because bread you can't produce in bulk, you can't store. Logistic will be an issue. So bread would be primarily be manufactured according to local taste and preferences, and the logistic will be such that it will be manufactured nearby. That's why we don't have very large player in terms of bread pan India. But biscuit, the shelf life is enough. The taste and preference are very much similar across the country, and hence we have 90-95% of the biscuit market which has been organized. One interesting fact is about 25 years back, biscuit was also regarded as small scale industries, and there were more than 30,000 small manufacturing unit. Then Government of India de-reserved the biscuit category from small scale industries, and hence we saw faster growth of players like Britannia and Parle, and later on ITC also joined the party. Let's look at some of the category in the biscuit segment. The first category would be the mass market. Here the product would be glucose category, and the pricing of the product would be less than 100 rupees a kg. After that, there would be a mid premium market where the price would be somewhere around 100 to 200 rupees per kg, and basically we will find Marie products and crackers in this segment. Then there is a premium market which would be cookies, digestive biscuits, and cream biscuits, and here the pricing would be bit steep. It can be anywhere above 200 rupees per kg. There are few new trends which are being emerging, at least in urban pockets in the biscuit segment. First is emergence and highly accepted healthier option among the urban household. So people with higher income are ready to pay a premium for a healthier option in biscuit category. Then we see different kind of cookies which are available, which is very expensive. So premiumization story for biscuit category will continue to play for a very long time. The glucose market is bit small. Most of the segment in terms of revenue comes from the mid premium segment, which is the crackers and the Marie biscuit and the low price cream biscuit and those things. Cookies would be the higher end segment where the realization for these people would be very high, and slowly as the disposable income of household increases, they also will increase the premiumization in the biscuit category. Let's look at future growth prospects of biscuits and bread category. In biscuits, we have already discussed there are majorly organized player, and three large players rule in this sector. So the industry growth will be very much similar to these organized sector player growth. While the growth for Mrs. Bector might be different because it is largely been a North India player for biscuits category, and they also have ambition to expand pan India. The biscuit market for India is somewhere around 50,000 crore currently, and it is expected to grow by 9-10% to somewhere around 62-63,000 crore by 2025. Similarly, the bread market is somewhere around 5,000 crore today, and which is expected to grow about 7,500 to 8,000 crore in near future. The bread market, the growth is much higher because people are experimenting with different kind of dough, different flavors, and hence the consumption of the bread will increase much higher. And as I said earlier, because people are resorting to faster cooking, bread becomes an easy breakfast for urban household, and hence we see that the combined revenue growth for this pot would be somewhere around 10%, while Mrs. Bector growth would be significantly higher from 10% because they are expanding on their production facility. Their plan is to increase their regional presence, and they are also building up their brand portfolio. Right now they are considered to be more towards a premium brand, and they want to expand their brand portfolio as they go forward. One of the reasons for being very bullish on Mrs. Bector is their manufacturing capabilities. They are contract manufacturer for Oreo biscuits and Choco Bakes for Mondelez. Mondelez kind of company will not give their contract for any players who is not assuring the product quality. Apart from that, few of the renowned QSR stores, QSR restaurant in India, they are supplying for more than 20 years. Again, the same reason, these kind of brand are very strict on their quality. Then Mrs. Bector achieve about 20% of their sales from export. Now think about this difference. Other food companies, ready to cook companies which exports from India, they are basically catering to the Indian diaspora who is living outside and they want the ethnic taste. But that is not the case in biscuits. So we come to the conclusion that the quality of the biscuits which has been supplied by Mrs. Bector, they are of top notch. That's the reason why this Mondelez factor, the QSR factor, and the export being 20% of the revenue. These factors gives us assurance about the manufacturing capabilities of the company. Company has been talking about 14-15% growth. They are regularly doing capacity expansion. Recently, they have expanded their capacity at Greater Noida facility, and now they would be expanding their capacity at Rajpura. So, company expects that once this capacities are fully operationalized and stabilized, they should be able to grow for 14-15% for next few years. The company has been a very dominant player in biscuit segment in North India, and they want to increase their regional footprint in other cities as well. Similarly, in the bakery segment, they are right now present only in the prominent cities, something like NCR, then Mumbai, Pune, and Bangalore. Now they want to expand to tier 1 and tier 2 cities. Since they have already built their brand and the brand has been recognized in the urban pockets, they think that it will be easier for them to convert the customers in tier 1 and tier 2 cities. We also know that company has a good business of bakery in Mumbai and Pune region. It will be likely to expect that they will expand their biscuit business in the same region. The company has been talking about Ebitda margin of 14-15%. Even in their last con call, they mentioned that they expect that the margin will be stable at 14-15%. Given their size is very small. Britannia is about 13,000 crore revenue business, and they also do 15-16% kind of EBITDA margin. A player with only less than 1,000 crore revenue is also making a near about EBITDA margin, says something about the quality of the product and the command they have above their customer in terms of price realization. Also, some of the other factors which might be contributing to this is they have exports which is about 20-22%, and in export you can have a higher realization. But on the other side, these things being having catering to export, contract manufacturing assure you on the quality of the business. Since you are catering to the food item, so the quality is paramount importance from a customer point of view. There is some comfort which we draw from financial of Mrs. Bector. When we look at their revenue growth, it is very much in line with industry growth, since we can only compare with companies like Britannia and Jubilant Food, which has been there for last many years. And Bector also cater to QSR restaurants. So we are comparing their revenue profile, the growth of revenue from Mrs. Bector versus Britannia and Jubilant Food Works, and we see that the both these three companies has similar kind of revenue growth. Thereabout, if we compare the EBITDA margin of Mrs. Bector with Britannia, it says that there are similar kind of EBITDA margin despite the size of the company being very small. Though all both of the companies, Britannia and Mrs. Bector, saw a jump in EBITDA margin in 2021, but now things have corrected, and now there might be a decrease in margin because of raw material inflation, which both the companies will be slowly passing on to their consumer. Other thing to consider in these kind of companies is how much they are spending on advertisement and promotion. Here are two different things which I want to highlight. If we look on the overall picture, the revenue is about 1,000 crore and companies spend only 10-12 crore in terms of advertisement and promotion. So it is only 1%, which is very low compared to industry standard. But here we have to further divulge into few details, which is 20% comes from say export, 17-18% comes from QSR restaurant, where do they supply the raw materials. Then there is contract manufacturing. So the base of revenue where the advertisement and promotion is basically being focused is not even 500 crore. So the percentage would still be 2%, 2.5%, 3%. Other thing which we looked on the financial was they have a decent amount of forward and freight in their P&L statement, something about 10% of their revenue, which says the company gives a lumpy discount to their wholesaler or distributor, and hence this is more like a push model right now because the scale and the size is very small. It might happen that once we see that the company expand to different geography, they will also increase their advertisement and promotion expenditure, and they will also have some bargaining power from their distributor and wholesaler. Why I am highlighting this factor is other food chain companies you will see in India, they mostly work with a negative working capital cycle. If you pick a company like Nestle or Britannia, they have a negative cash conversion cycle. The cash conversion cycle is very short, and they don't give too much liberty in terms of credit to their debtors. While when we look at Mrs. Bector, the cash conversion cycle is somewhere around 30-35 days. So this also says that the brand is in a phase of building up in terms of dominance. And once we see that the brand appeal among the consumer is very high, they will also try to squeeze their retailers, wholesalers, and distributor, and try to bring their working capital cycle significantly in line with the industry players. Generally what happen in FMCG and food companies is they will have this short cash conversion cycle, and once the brand is built, they will rely more on contract manufacturing rather than their own manufacturing facility. What this help is that they can expand their revenue profile very significantly, and the ROE, return on equity, for these companies would be very high because they are focusing mainly on branding and marketing of the product. They are deciding on what product which will sell in the market, but then the manufacturing part, where the operationally heavy part is lying, that is outsourced, and hence the company comes at an asset light model. While Mrs. Bector right now is building that journey of brand, and hence right now they are building on their manufacturing facility. But we also believe that once they achieve the scale of 2000 3000 crore kind of revenue, they will also charter this kind of path where they will have a lesser of their own manufacturing facility, and they might also go for outsourcing one. They will also have a reduced working capital cycle, and in line with other players in the industry, they will also have a higher ROE. Finally, on valuation, Mrs. Bector trades at somewhere around 2x sales and 25x trailing EPS. This is very low compared to other FMCG and food related companies. The branded player like Britannia would be trading at 5-6x of their sales and somewhere around 50x of their EPS. Other company in the food category, Nestle, would be even higher. So why do some companies trade at such a steep premium? There are few factors. Something like a brand dominance. So when investor is investing in Britannia, they can easily take a very long term view. They have visibility of revenue growth, and the company will continue with their operations for a very long period of time. It will be very difficult for any new company to come and displace a dominant brand like Britannia. But a company like Mrs. Bector has to travel that journey from somewhere around 1000 crore revenue to build the revenue of 3000, 5000 crore. And they also need to build their brand pan India. So when they scale this journey, the multiple will improve from here. But till then, the growth, if they are able to achieve 14-15% kind of growth, which the management is highlighting, and they are able to maintain similar kind of EBITDA margin, the company should deliver, stock price should deliver this kind of return, 14-15%. Other thing which helps when you build a decent brand, you move to an asset light model, which helps you to scale a company faster, and then you generate a higher ROE as well. All this factor combinedly make a company to trade at a premium valuation. So Mrs. Bector has built their product right. Now they have to scale it, and once they scale it, I also think that they will achieve a decent kind of valuation. Let's look some of the risk factor. As we have discussed, the company will be expanding their geographical footprint. There lies a risk in terms of failure of their strategy. We should not forget the case study of Bakerman. There was one company which was very famous 10-15 years back. They have dominant market share in a pocket like UP, and then they wanted to expand to pan India presence altogether at a single go. What happened was company was not able to manage their expansion very well, and then later on become bankrupt and was later on sold out. The other risk which I feel here could be, there could be some confusion among the mind of investors. There was some vertical split among the family, in which Cremica brand, which sell biscuits and bread, comes to Mrs. Bector, this listed entity. Then there are other brothers who do other businesses with the same brand. There is Cremica ice cream. There is Cremica sauces and ketchup, who sells mayonnaise and something else. So there can be a confusion among the investors' mind. Also, there can be a problem if the listed entity want to expand anything beyond bread and biscuits. I'm not sure if other categories which are not being done by other player brothers right now, how the family will decide which product segment the any brother can enter into. So this can be the risk for the listed entity. We also saw there is to exit from two private equity investors, which has been invested in the company for a very long time recently after IPO. And this can bode well for the company that they have now more market related investors rather than any private equity investors overhang on the company. All in all, this looks like a good company with a decent brand which want to build their presence pan India. And current the market cap of the company is very insignificant at 17-1800 crore. As I always say that all this discussion is for education purpose and should not be construed as an investment advice. And in case you like the video, please spread the word. Thank you.